Welcome to Second Take, the show that focuses on the issues behind the news. X2 Resources, headed by South African-born Mick Davis, has garnered another $1 billion to take the developing mining company towards financial reserves of close on $5 billion. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Can you tell us about X2 Resources and its leader, Mick Davis?
Yes, Mick Davis we know from South Africa because he was the financial director of Eskom. In the 80s and the 90s, he went into mining with the then Gencore, which morphed into Billiton, and he was involved in that Billiton deal, listing it in London. And then also he was involved with the BHP Billiton deal. And then in 2001, he created Xstrata. Well, he didn't create it, but it was a small Swiss company that was fairly deeply in debt. And he took it in 8 years. He turned it to in rands, a 500 billion rand company. That's really impressive. So people from Port Elizabeth remember him, in his school days, also at Rhodes University, and he lectured at Wits as well. So we really know him in these parts, and he has come here to give certain presentations in the past, and he's always delivered a very meaningful message, over the years, over decades, from that 2001 to now. And we would go and listen to him at Wits, and he would say to South Africa, you must invest billions of rands, 100 billion rands now in water. He would say you must go for bulk water. Otherwise, it's going to hold up the growth of the economy. That was 2010, I think he said that. And then he said, look, from the mining point of view, miners can actually generate their own electricity. And he had companies in Australia, Xstrata, which sort of had their own train sets. They would use the state-owned rail line, the track, but they were used to doing their own transport. And he's saying, look, the state can actually withdraw from that, because in other countries it's fairly successful. One thing that we need you to do, get that water. So I think we should still remember that.
Yes.
And he also made the point that Johannesburg could be the center of gravity for finance for Africa. You could be raising it on the Johannesburg Stock Exchange. A big point he made was that, the biggest copper producer now is Chile. But its fortunes are waning because they're going deeper. The grades are getting less. And the next big copper center is going to be around the DRC and Central Africa. And he's saying that it's just a matter of time before that really develops with huge demand for the copper. And the copper there is shallow and it's so rich, the grades are so high, that Joburg should be the financial center to fund the development of that. And I think those are the thoughts we should still carry. We see him now with X2, which is the second take of Xstrata, virtually same team with him. Trevor Reed, who was with him during the early deals with Gencore and Billiton, still there. Their timing is impeccable. The cycle is now down. So you don't want to have assets at the moment. You want cash. And he's raising cash strongly. That's coming through from, even sovereign wealth funds and pension funds backing him with, you could say, $5 billion worth as it stands. There are bargains all over the place at the moment. So, the cycle is right for this sort of activity. So you've got to give it to him. He can see the future. He knows when to get in, when to withdraw. Yeah. And at this point, he's in a very sweet spot.
Now, it seems that the X2 investment proposition is to acquire businesses when the cycle is low, while other blue chip companies are sort of demerging and disinvesting to cope with low commodity prices. Can you tell us about that strategy?
Yeah, it's the way to do it, I think. If you're going to really be involved in the financing of the mining growth and being able to give your shareholders a return on investment, the cycles are crucial. And we are in a down cycle at the moment. Iron ore prices are down, copper prices are down, gold prices are down. It's only diamonds that's looking a bit sparkling.
Of course.
But everything else is really in a down cycle. And his clear vision, I think, is to actually have a lot of cash when you're in that down cycle. And he's starting again, and he's got a lot of backers with a lot of cash. knowing that there are just bargains popping up every day. And they're not bargains from juniors necessarily. These are bargains coming out of the diversified majors. You are having to offload anything that doesn't give it the proper return at the moment. But those assets are normally very good assets. You know, they're long life, low cost normally, because you won't have these big diversified majors holding on to assets that really are substandard, that an entrepreneur needs to deal with, rather than this big corporate. So those are available now, and he could then try and get his hands on some of them, which I think would be good for the shareholders, because as things improve, he'd be able to give that return, which they've become used to from him, which very good returns.
Who are some of his backers?
Now, you know, these are little-known companies. Noble Group, for instance, they came in early with $500 million, and then you've got also the little-known TPG Capital. You know, I haven't even heard of it before, also coming in with an equivalent amount. And we see a logistics element within this, which gives one the impression that maybe this could mirror Glencore, perhaps, because Xstrata went into Glencore. Glencore was a trading company and has become a mining company. This will probably be a mining company, but it seems to have an element, a potential element of trading. And we can see that that's quite valuable these days when you've got this trading arm, when you know the market well. It puts you in a good position. And there's a logistics element there that he's already tied in with X2, which maybe will give a transport leg to some of the metals and minerals that are mined, which will be interesting. And if it becomes into a trading element as well, you can do well when commodity prices are down, because you've got that additional trading income. And we see that working quite well with Glencore. And Glencore used to have a big shareholding, of course, in Xstrata. It was 35%. And then there was this merger of the two, and that is when Mick Davis and his team withdrew and created, instead of the Xstrata, X2, the second take of Xstrata.
Well, we hope that he will share his crystal ball and we watch the space.
Yeah, he's got, his management style is interesting. You know, he gets a very clear sort of vision, and then he pursues it with a lot of self-belief. And it's done at very high level, very intensely. And I've managed to be able to get quite a lot of information from them, but they generally only give you information when there's some key milestone that's met, and it's an interesting way they communicate. I hope that they communicate a little bit more next time around. But of course they were London-based, and hopefully, you know, there will be an element of a listing at some stage that will include Johannesburg.
Well, thank you very much, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.